Thank you for watching this preview video at xm.com. We'll be discussing the upcoming Eurozone inflation data and the outlook for the euro. I'm Maria Pachordiz, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, last year Germany, the Eurozone's largest economy, contracted, and it's still struggling today. Now on Wednesday we'll get Eurozone-wide inflation data for March. What are we expecting there, and how might it impact the ECB's next moves?
Certainly. Hello, Maria. So look, it's been a pretty tough year for the Eurozone economy. Economic growth in the Eurozone is basically stagnant. It was 0.5% last year. And most of that, as you alluded to, is because of Germany being in a minor recession. Now, Germany has been plagued by a slowdown in global trade that has essentially suppressed demand for German exports, and it has hurt the manufacturing sector. Germany, you could say, has been the sick man of Europe, almost, holding growth back in the euro area. And unfortunately, I think that situation is unlikely to improve anytime soon because the German government has been forced to slash spending and investment recently in order to conform to some constitutional debt rules that basically prohibit the government from running big deficits. So, to put that in very simple terms, the German economy has been struggling and it desperately needs an injection of stimulus. However, it's about to be given a dose of austerity instead, and that is likely to hit growth even harder. So, what I'm seeing, Maria, is a situation where the European Central Bank might have to cut interest rates faster and maybe deeper than what the markets currently expect. The euro is going to be affected, and of course, we're going to get the inflation data on Wednesday. Those are going to be really important. Now, forecasts by economists suggest that Eurozone inflation continue to cool in March, both on the headline CPI level and on the core level, and business surveys pointed in the same direction. If we continue to see this slowdown in inflation coupled with the dark economic growth outlook that I was describing a little bit earlier, I think that paints a relatively difficult environment for the euro. But yeah, let's discuss that a little bit further.
Yes, exactly. So turning to the euro now, what has been keeping it afloat lately, and what will it need going forward to help it remain above water?
Certainly. So look, if we were just trading economic data and economic fundamentals between economies, the euro is one of the least attractive currencies because, as I mentioned, the Eurozone economy is basically stagnant, and you have recession risks that are still very much in play, especially with Germany now tightening its belt. So I think that the main reason the euro has been so resilient, well, two reasons really. The euro has been relatively resilient over the last year. The big one has been the collapse in natural gas prices. So if you remember a couple of years ago when the euro was struggling, that was because natural gas prices were extremely high. Now, with natural gas prices collapsing and staying low, that has helped to boost the euro through the trade channel. And the secondary reason has been the cheerful tone in the stock market. That's, when the stock market hits record highs, that's bad for the US dollar, which is a safe haven, and therefore it's good, it's positive for the euro. So the euro has been kept afloat not by its economic performance, but by developments in other financial markets. Therefore, what the euro needs to stay above water are low gas prices and rising stock markets. If we see any change in these trends, that could remove a big pillar of support for the euro, and thereby traders might start to focus on the dark growth outlook in the Eurozone instead.
Marios, thanks so much. This was a preview video here at xm.com.